Hi, and welcome to the Money Lens. Today, we're diving into the basics of stock investing. If you're new to the stock market, or just curious about how to start, you're in the right place. By the end of this video, you'll understand the essentials of what stocks are, how they make money, and how you can start investing. Let's start with the basics. What is a stock? When you buy a stock, you're buying a small piece of ownership in a company. Think of it as owning a tiny slice of a business. Companies issue stocks to raise money, which helps them grow, innovate, and bring new products to market. As a shareholder, you become part owner of that company. There are different types of stocks, but the two main ones are common and preferred. Common stocks give you voting rights and dividends, while preferred stocks usually provide fixed dividends but no voting rights. Most investors buy common stocks, since they have more growth potential. So, how do stocks make money? There are two main ways. 1. Capital gains. When the price of the stock goes up from the price you bought it at, you can sell it for a profit. 2. Dividends. Some companies share part of their profits with shareholders in the form of dividends. These are usually paid out quarterly, giving you a steady income stream. There are also different types of stocks, like growth stocks, which reinvest profits to grow the company, and dividend stocks, which provide regular income. Now, let's talk about where stocks are bought and sold. Stocks are traded on exchanges like the New York Stock Exchange, NYSE, or Nasdaq. You'll need a brokerage account to access these exchanges. Brokers are like the middlemen who facilitate your buying and selling. We also have something called stock market indexes like the S&P 500 or Dow Jones. These indexes track the performance of groups of stocks and give us an idea of how the overall market is doing. If you're ready to get started, the first step is to open a brokerage account. Look for a platform that offers low fees, a simple interface, and educational resources for beginners. Once you have an account, start by researching companies you're interested in. A good tip for beginners is to consider ETFs or mutual funds, which are collections of stocks that offer diversification and lower risk. Before buying any stock, it's important to know how to evaluate it. Here are some basic metrics. P/E ratio. This tells you how expensive a stock is relative to its earnings. A high P/E ratio could mean the stock is overvalued. EPS, earnings per share. This shows how much profit each share of stock makes. Higher EPS is generally better. Dividend yield. If a stock pays dividends, this metric tells you the return you'll get from dividends alone. These metrics help you assess whether a stock is a good value and aligns with your investment goals. Of course, every investment comes with risks. Stocks can be volatile, meaning their prices can rise and fall quickly. You should only invest money that you're prepared to leave untouched for a while, since the stock market can be unpredictable in the short term. Another key point: avoid investing based solely on hype. Stick to companies with solid fundamentals and long-term potential. And there you have it, some basics to get you started on your stock investing journey. Remember, investing is a marathon, not a sprint. Keep learning, stay patient, and stick to your plan. If you found this video helpful, don't forget to like, subscribe, and hit that notification bell so you don't miss future videos from the Money Lens. Let us know in the comments if you have any questions or topics you'd like us to cover next. Thanks for watching, and happy investing.